banks here in Singapore advising their private banking clients to invest in sectors with long-term growth prospects as US-China trade tensions continue to bite. In a mid-year outlook, they're urging investors to bank on secular trends, meaning those that are immune to seasonal effects. Now, these include growth in Asia, digitalization and healthcare. Eugenia Lim with more.
It's looking like the
US-China trade continues to be the biggest risk to investors, as the outcome of negotiations are still up in the air. And depending on developments, Citi Private Bank says the trade war impact could see global equities swing up or down by 10%.
We recently actually brought our allocation to equities down to underweight for global equities. And that is because we're going into a period where a few leaders in the world get to decide how trade moves forward. And that's a very unpredictable environment.
In light of such uncertainty, DBS urges its clients to anchor their portfolios in income-generating assets, such as REITs and corporate bonds. Banks also advise long-term defensive plays.
We are also encouraging our clients to take outsized positions on equities that ride on secular growth trends. These would, of course, be trends like the world transforming itself into a digital economy. Who are the winners in this huge shift?
We remain convicted in a lot of unstoppable trends, things that we believe have strong secular growth potential, such as the development of Asia, such as technology and healthcare.
Meanwhile, UOB urges its clients to focus on fixed income. It's also bullish on the growth in Asia.
In the next 10 years, I will put more money in Asia. One of the key things, as mentioned, is due to the young population, the great demographics, and basically higher per capita income that's going to come into Asia. And also another thing will be the political will amongst the Asian leaders to openly embrace globalization, especially at such a time. I think that the openness to freer trade, I think, will be important.
Free trade will be exactly what investors will keep their fingers crossed on as US-China trade negotiations resume.